In today's video, I want to take another look at the dollar. Pretty sure it is starting an intermediate decline. Now, I guess maybe a case could be made that this was an intermediate decline right here, but I don't really think so. Didn't really turn the 10-week moving average back down, and it was also really short. So I think what we're dealing with here is a really long, really stretched intermediate cycle that is finally topping as the Fed has announced that they intend to taper QE and start raising interest rates, and the market is pricing in a quarter point raise at the March meeting. So the market is, I'm pretty sure the market's doing the opposite of what logic would dictate. Logic would suggest that if the Fed's going to taper QE and raise rates, and the dollar should go up. The problem, of course, is that the dollar's been going up for almost 7 months. So it's been pricing this in for a long time. And now that the news is out, basically we've got a sell the news type of scenario in play here. So now that the news is out, the market, instead of the dollar continuing to go up, now all of the people that have been buying in anticipation of this are now selling. And so the dollar is preparing to move down into an intermediate cycle low. So I noted, at least in my daily reports, I'm not sure if I did a public video on this or not, but we've got a support and resistance zone right here at this pivot and this pivot, and that was the logical spot for the dollar to find support and probably a daily cycle low. So now let me convert this to the daily chart. All right, so there was some question in my mind as to whether or not this would constitute a daily cycle low. We've got a really long, really stretched cycle here. The problem I really had with this is it only bounced for 2 days. You know, a daily cycle that tops on day 2 would be an extreme outlier. Doesn't seem likely to me. So I think probably what happened or has happened is that the dollar found support on that on those 2 pivots that I just showed, and now we're going to get our bounce out of our daily cycle low. What should happen is once RSI gets overbought, this cycle should roll over and start back down again, and then we'll left translate this daily cycle. You can see that this cycle was right translated, and assuming this is a daily cycle low, this did not go below this pivot. This was the last confirmed daily cycle low, and so we made a higher low. It's time, I think, to make a lower low. That's what intermediate cycles usually do. They usually, a previous daily cycle pivot will get broken, and you'll make a lower low. So I think what's going to happen here is this week the dollar's going to bounce, and that may or may not put pressure on stocks. Stocks are, in my opinion, pretty clearly moving down into an intermediate cycle low, but I don't know that it has to be that extreme. We didn't really get stretched all that far above the moving averages during this rally, and sentiment didn't get excessively bullish, so we didn't really stretch the rubber band that far in the stock market, so I don't think we have to really stretch it that far to the downside either. So my expectation is a rather mild intermediate cycle low in the stock market, and a short one. I think we're going to be on week 15 this week, so the intermediate cycle low could end either this week or early next week, and then we start the advancing phase again. So probably I think what's going to happen is we get the Fed meeting out here on the, I think it's 16th or 17th of March. That's where they are going to raise rates. So my guess is we get a little bounce. Once RSI gets overbought, we roll over, and then we left translate this cycle, and we bottom either on that FOMC meeting where they do raise rates, or a little before that. That is going to, this little rally here is probably going to put pressure on gold. Oil is getting pretty close to a major resistance at its previous intermediate top, so oil may take a breather. Stocks probably will continue down and finish that intermediate cycle low, but like I said, it could be just a very choppy move, like one day up, one day down, back and forth, and just not a very deep intermediate cycle low. Maybe the S&P just tests the 200-day moving average. Gold, on the other hand, is probably going to retest its previous daily cycle low. This is going to give any bounce here in the dollar is going to give the cartel an opportunity to attack the metals again. And they will. We got a big inflation problem, so the cartel is going to try and suppress gold if at all possible. So you may get another chance to buy metals on a retest or maybe a marginal undercut of that previous daily cycle low in gold. All right, so here's what I'm talking about. This has the potential to left translate this daily cycle. It did not make a higher high here. If the dollar starts to rally, the cartel is going to attack gold, and we could come down and test, or preferably marginally undercut this pivot, and then that would give us a more recognizable ICL in gold, give you another chance to load up on some more physical silver, and then I think we're set up for a rally into that March FOMC meeting out here, as I think the dollar will decline into that. All right, so here's the dollar chart again, and here's what I'm watching. So here's what I think is our dip down into the daily cycle low. We should get some kind of bounce here, maybe something that just looks a little bit more recognizable as a daily cycle low than this little 2-day bounce right here. And then this daily cycle left translate, rolls over, makes a lower low, comes down and bottoms either on that FOMC meeting where they hike rates, or a day or two before. And then this is where it gets really interesting. The next 3-year cycle low is going to be due probably in late 23 or early 24. It's possible that this 3-year cycle in the dollar may have topped right here. So this next intermediate rally is going to tell us. So wherever this pivot, this intermediate cycle low, wherever this pivot comes at, and as I've said before, I usually like to see at least a 38% Fibonacci retracement. So I gotta think the dollar's at least coming down to 94. And if it goes much deeper than that, if it was to retrace all the way back to the 62% Fibonacci retracement, then we may have problems in that the dollar, the 3-year cycle may have topped. So this intermediate decline is going to tell us a lot. If it goes really deep, then the odds are not good that the next intermediate cycle will be able to recover and make a higher high. The next intermediate cycle could rally. Maybe it only gets back up to 95, and then it comes down and it left translates, and it makes a lower intermediate low. And if that were to happen, that would be confirmation that the 3-year cycle in dollars topped, and that we are indeed in a secular bear market. And then almost certainly what would happen would be that the dollar would come down and break below this 3-year cycle low right here. I'll keep a close eye on this. We want to see, after this little bounce here, we want to see just how deep the dollar falls as we move into that FOMC meeting. And then after the FOMC meeting, we want to see how much of an intermediate rally we can get before the dollar rolls over and starts down again. And if this next intermediate cycle left translates and breaks this pivot, wherever this occurs at, then the dollar's in big trouble. And that's going to be a very good sign for metals, commodities in general, It'll probably be a good sign for stocks for a while anyway, until inflation heats up too much and then causes the next recession. And I've said before that usually 100% move in oil in less than a year is usually what it takes to crash the economy. Oil is already fairly high, but I don't think it's high enough yet to cause a recession. But if oil was to jump to $150 by next fall, then yeah, we're probably setting up for the next recession. So the currencies I think are going to be important. We're going to see just how far this little bounce can get. Maybe it doesn't get very far at all, and then exactly how far this intermediate decline drops as we head into that March FOMC meeting, where the Fed they do have the cover to raise rates now. The market is pricing it in. And so the odds are very high that they are going to raise a quarter point in March. And that's probably the trigger event that puts an end to the intermediate decline. And then we get our next intermediate rally. How far that rally goes will tell us whether or not this 3-year cycle is topped.